Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Surveillance Podcast, formerly with Bridgewater, Rebecca Patterson.
Right now, what I think we're seeing that's pretty interesting is some broadening of global growth. Last year was all about the U.S. being the engine. And now with the constant stimulus efforts by China, albeit focused on manufacturing, and that's trickling into Europe. We're seeing some very small, I don't want to overplay it, but green shoots in Europe. Even German confidence data this week came out slightly better than expected. And of course, in the U.S., we're seeing a pickup in manufacturing at the margin. So when we see a broadening, what it tells us is that we're going to see some slight shifts in preferences among investors. U.S. consumers and investors will have more confidence taking overseas risk, especially with a big valuation discount overseas versus the U.S. We'll tend to see more cyclical assets do well, commodities, small caps. We'll tend to see less liquid assets do well, emerging markets. And we often tend to see the dollar go down in this environment as U.S. capital goes overseas. The question I have, Tom, Paul, is does it last? And how big a move is this, or is it just incremental? And that's where the humility comes in. So I still like having a lot of my capital in U.S. markets. I think the U.S. economy is likely to remain strong for some time. But I think if you want to make a trade looking at a month or two, taking a little bit more risk overseas or in some of these areas I just mentioned, this is the moment.
Hear the full conversation on the latest edition of the Bloomberg Surveillance Podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. Steep losses for the U.S. stock market. We are at the lows of the day, and we have got 20 minutes to go ahead of the closing bell. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bailey Lipschultz.
And good afternoon, Charlie. As you said, stocks erased an initial rally and are trading near session lows ahead of jobs data on Friday. The Dow is down 490 points, S&P lower by 55, with the Nasdaq falling 175 points. The U.S. 10-year yield is at 4.31%. Crude oil rose more than 2% to top $87 a barrel for the first time since October, and small caps are down 10 points. All 11 main S&P sectors are trading lower, with tech and healthcare dropping more than 1%, while energy and consumer staples are the best performers. Nasdaq biotechs fall 35, transports drop 1%, semis are down 120 points, while the VIX is higher by 12%. Only Walmart is trading higher among Dow components, while Salesforce, 3M, and American Express are the worst performers. After earnings, Conagra Brands rose on better-than-expected operating margins. Lamb Weston sank 20% after cutting its sales and profit forecasts, and Levi Strauss jumped the most since 2022 after lifting its earnings view. Wrapping things up, HubSpot jumped to the highest since 2021 on a report Alphabet is talking with advisors about a deal. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey Lipschultz. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
Yeah, but you let me drive.
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, Jess Minton and Tim Stenovic here in the Bloomberg Interactive Broker Studio with just under 20 minutes left to go before the closing bell. If you do a quick check here on the S&P 500 and the NASDAQ 100, both down over 1%, so that would be the first time the S&P 500 would see a decline of that magnitude, Tim, in about a month. But I have to also point out, just down about 2% from its all-time high. But who better to check in with the latest on the market movements here heading into the closing bell than Gargi Chowdhury, the Chief Investment and Portfolio Strategist for Americas at BlackRock, who's joining us on Zoom in New York City. Thanks so much for joining us ahead of the closing bell here. Break down what you think is sort of turning here in the last hour of trade and why we're seeing stocks give up their early gains from this morning.
Hi there. Good afternoon, Tim and Jess. I think a couple of things that's spooking investors out just a little bit. Number one, I think there was some hawkish comments out from a couple of Fed speakers, just this idea that the Fed may not need to go at all this year. I think that's certainly something just based on the timing of when the market turned. Number one. Number two, and this I think is more important, is the price action in oil prices. Obviously, Brent crude going back significantly, moving significantly higher today. That is something that is adding quote unquote fuel, because there was already this concern around sticky inflation. And now, of course, if you do have oil prices continuing to turn meaningfully higher, if Middle East tensions continue to, get even worse, investors are considering what that might mean for consumers, what that might mean for interest rates, and of course, as a result of those two, what that might mean for investment returns in the stock market.
Yeah, Gargi, when that happened during our 2:00 hour on the program, we had Michael McKee on, and he made the point that, well, one, the Fed can't do much at all, if anything, about oil prices, and two, they're much more interested in the second order effects of the way that they move, that a price increase in oil and energy would actually move throughout the economy and mess with their inflation goals of getting inflation down to 2%. Is this move in energy, in your opinion, could this be a sustained move higher?
I think that's the really important question, right? So if this is a move that we experience and then we sort of come back down to levels that we have been in for the last quarter of 2023, I think that's fine. And that's certainly something that both the Fed and the equity market will look through. But if this is something more pernicious, if we are getting back towards that, or even if there's a fear of getting back towards that $100 price oil level, that can be problematic for a couple of reasons. Look, of course, the Fed looks at core PCE. We know that. But higher energy prices can make their way into core inflation as well, because as we know, every type of good that you purchase or service that you experience, such as an airline ticket, for example, has an embedded energy cost associated with it. So that is something that we have to consider. So the sustainability of this energy rally is important. The second thing I think is pretty important is the strength of the consumer. So far, growth expectations in the U.S. have been so immensely helpful for earnings growth, as well as, of course, for how consumer sentiment has been. And consumer sentiment is often driven by what consumers are paying at the gas station. I think if that is something that continues to move higher, I think sentiment is going to be definitely driven, and how consumers feel about spending going into the second half of the year, especially if interest rates remain high, can be a concern. Now, I will say that our base case isn't for this to change the Fed's path, but I think the risk has just risen.
It's so interesting that you talk about sentiment, because it's so visceral going and pumping gas, and how much you're paying every single time. So that's something that certainly the consumer pays attention to. Hey, I just want to jump in with Redhead crossing the Bloomberg terminal. Thoma Bravo targeting to raise about $20 billion for its next flagship buyout fund, according to people with knowledge of the matter. The tech-focused firm discussing commitments to Thoma Bravo Fund XV1LP with potential investors. That's according to the people who asked not to be identified, discussing confidential information.
Okay, Gargi, we're only about 4 trading days into the new quarter, but what are you advising your clients to buy and sell after we obviously saw a big rally around 10% in the S&P 500 in the first quarter?
Sure thing, Jess. I think, we just came out with our Q2 outlook earlier this month. The focus there is for investors to focus on quality in their equity portfolios. So what do I mean by quality? We think that companies that have stable earnings growth, companies that have a lot of free cash flow, and most importantly, have low financial leverage.
What are some of those companies
that are going to, some of those companies are the big tech names that you hear. Some of them are in the healthcare sector, and some of them are in the financial sector. It's really not about the sector or the industry, but it's really very stock specific and focusing on, we think investors can access that through a ticker QUAL, which has some of those companies in it that have those earnings growth that are screened for higher earnings growth and stable and low financial leverage. So I think that's one way that investors can focus on for the remainder of 2024. I also think that in a world where growth remains solid and inflation, though sticky, is still continuing to come down, and the Fed most likely cuts rates at least 2 times this year. In that world, you want to be focused on earning income within your fixed income portfolio. So again, keeping where you own duration really matters. So keeping that interest rate sensitivity in that 5-year or shorter part of the curve, but earning income in higher quality parts of the fixed income market also make a lot of sense. So I think remain invested, remain up in quality, clip some coupon, focus on sectors like tech as well as financials, if you want to look away from that growth area of the market and look at a little bit of the value areas that we think can still do well, and then clip some coupon in the fixed income markets. That's what we're telling investors to do right now.
We only have about 45 seconds left, but you mentioned financials, which does have not only big banks and regionals, but you do have fintech companies and insurers. Where within financials do you like?
Yeah, so what we're telling investors to do is actually stay, again, in the higher quality part of the financials market. So the ticker that we're recommending investors is IAI, but really focusing on those large banks and brokers where we think the impact of capital markets reopening, the steepening of the yield curve, all of that will come into play. So focus on communication services and quality in tech, but also barbell with financials, but up in quality.
Gargi, we're going to have to leave it there. Thank you so much for joining us this afternoon. Gargi Chowdhury, Chief Investment and Portfolio Strategist, Americas at BlackRock, joining us from New York City. Still seeing some selling into the close, though, off of lows, down 1.05% on the S&P 500, 1.3% on the Dow, the NASDAQ down 1.1%. Coming up next, it's Beyond the Bell, our cross-platform coverage of the market close. This is Bloomberg.
Catch complete coverage from the world of politics and the world of business on Bloomberg Balance of Power. Tune in for Joe Matthew and Kaylee Lyons tonight at 5 p.m. Wall Street time on Bloomberg Radio and television.
Now your 3-day weather forecast on Bloomberg 1130.
It'll stay mainly cloudy for the rest of today, along with some gusty winds at times and a few scattered showers. Temperatures upper 40s, low 50s. Tonight evening showers end, 35 to 40 overnight. Maybe a passing shower Friday afternoon. Otherwise clouds and sun near 50. In the 50s here for the weekend, maybe close to 60 on Sunday. Both days will feature a mix of clouds and sun. This is Gary Best with your weekend weather forecast on Bloomberg 1130.
The Big Take, a daily podcast from Bloomberg and iHeartRadio, highlighting the best reporting by Bloomberg News from around the globe.
Voting in the U.S. might be a zero-sum game.
The winners and the losers in the AI sphere.
Sanctions have been called the alternative between words and war.
Each weekday, we dig into one important story and tell you why it matters.
The U.S. has really leaned into depth.
Does this technology potentially destroy the world?
Listen to The Big Take on the iHeartRadio app, Apple Podcasts, or wherever you listen.
Artificial intelligence has propelled innovation for companies and bad actors alike. To keep your business safe from cyber mayhem, you need to harness AI that can stay one step ahead of cyber criminals. Adopting proactive security, powered by the best of AI, can keep your business going. That's security in action. To learn more, visit checkpoint.com/action.
Hey, pet parents. With Progressive's collision coverage, you get extra protection for your cat or dog, because there's nothing worse than seeing your pet hurt. Like when you see their face after accidentally stepping on their tail, and you say, "I'm so sorry, Mr. Pickles." But as you kiss his nose and rub his little belly welly, you know Mr. Pickles is thinking, "You betrayed me." Anywho, Progressive pays up to $1,000 in vet bills if your pet is injured in an auto accident. Learn more at Progressive.com and watch where you step. Progressive Casualty Insurance Company and Affiliates. Collision coverage subject to policy terms. Not available in all states.
I'm Alex Rodriguez.
And I'm Jason Kelly.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
That is a harsh lesson in business.
Sports is not as simple as bringing a bunch of big names together.
I didn't want to do another stomp you out speech.
It opened up so many more doors.
The show is called The Deal.
Listen to The Deal wherever you get your podcast.
And watch on Bloomberg Originals, Bloomberg Television, or BTV+.
Coming up next on Bloomberg Business Week, we check in with our colleagues on Bloomberg TV, Scarlett Fu and Alex Steele, for our Beyond the Bell coverage, our countdown to the close, where we take you to today's market close and beyond.
Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. CVS Health drug plans will cover over-the-counter oral birth control in the U.S., a step that further removes barriers to obtaining oral contraception as reproductive rights increasingly come under fire. CVS Caremark says Opill, that is the non-prescription drug from Perrigo, will be added to the Preventive Services Oral Contraceptives list and will be covered at no cost for many plan sponsors. CVS shares, they're down now by 0.8%. Alphabet is reportedly talking with financial advisors about potentially making an offer for HubSpot. That is an online marketing software company, this according to Reuters. The news service, citing sources, says the Google parent has met in recent days with investment bankers at Morgan Stanley about a potential offer for HubSpot. HubSpot shares are up by 5.1%. Alphabet, parent of Google, down by 2.7%. Such a large transaction would be unusual for a big tech company like Alphabet, as the sector is under heightened scrutiny by antitrust regulators. Ford is delaying the rollout of an electric three-row sport utility vehicle by 3 years, extending the layoff of 2,700 workers in Canada who were set to begin building it in 2025. Ford down 3.3%. Tesla shares, they are up today by 2%. A prominent proxy advisory firm is telling shareholders to vote against Goldman Sachs Group's executive pay plan after the Wall Street giant's top leaders were given lofty raises in a year when profits slumped. And those are some of the top company stories that we have for you at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Tim Stenevec and Jess Menton in for Carol Messer. Today, a Bloomberg red headline crossing the terminal right now. Money market assets hit a record $6.11 trillion in the week leading to April 3rd. That's from ICI. We're talking about the markets, though, because we are seeing quite a reversal from what we saw earlier, Jess Menton. The S&P 500 off its worst levels of the day, but still down more than 1%, as are the Dow and NASDAQ Composite. I agree with what Gargi told us. It's kind of the general consensus about what kind of happened here. Hawkish comments from some Fed speakers, Neil Kashkari being among them, essentially saying, okay, well, we might not see any rate cuts this year. And then oil spiking to $90 a barrel.
Right.
Brent crude. What's your takeaway? I mean, you follow this each and every day.
Well, it's interesting because if you look at energy stocks, they actually had been beating technology shares this year, a little bit under the radar, but now people are focusing it more now that we've gotten into the second quarter. But not just energy, also the financial sector had been beating the XLK. So that's the ETF that tracks the technology sector in the S&P 500. So when people keep talking about for months and months now, as you know, Tim, the broadening of the breadth, right? And so you're actually starting to see that, even though you're seeing, actually, if you look at, we talked about this earlier, chip stocks. So the SOX, the Philadelphia Semiconductor Index, it turned lower today, down about 2%. So, I mean, all 11 industry groups in the S&P 500 are lower right now, not surprisingly led lower by technology because those chip makers are housed in that, followed by healthcare and financials. But if you think of some other unloved corners of the market that people weren't paying as close attention to, materials just came off a 10-week winning streak and actually was its best 10-week stretch if you're looking at the XLB, the ETF that tracks it, since it was started in the late 90s. So you are seeing, despite today, you're seeing this sell-off here, you still are seeing improvement in other corners beyond technology too.
One thing that's surprising to me is just the range that we're seeing in trading today. I mean, I'm looking just at the NASDAQ 100 right now, which is down 1.45%, close to worst levels of the day. And it was as high as 1.1% earlier in the session. So, I mean, look at that range.
And the S&P 500 down more than 1%. So that would be on track if it can close at this. Its first 1% decline at least in about a month here, Tim.
Well, that's how things have been going. Things have been moving the other way.
Still jobs tomorrow,
We're actually seeing stocks continue to move lower as we speak right now. Don't go anywhere, because coming up next, we're joined by our Bloomberg TV team for our cross-platform coverage on TV, YouTube, and Quick Take to count you down to the close. Beyond the Bell starts now.
Live from the financial capital of the world, broadcasting across the globe, this is WBBR New York, Bloomberg 1130. Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day on this Thursday, I'm Alex Steele. Alongside Sonali Basak, we're counting you down to the closing bell, here to help us take us to the bell and beyond. With a global simulcast, we're joined now by Scarlett Fu here in TV, Tim Stenovic and Jess Menton joining us over in radio. We're bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. And Tim, you know what? The most crucial points were like the last hour and a half.
Yeah, I completely agree. I think there were two crucial things that just happened in the last 90 minutes. One, some hawkish Fed speak from none other than Neil Kashkari saying, wait a second, we might not get the data that we need in order to justify any rate cuts so far this year. And then, of course, Alex, I mean, well into what you talk about each and every day, the price of a specific commodity, none other than Brent crude, spiking through $90 a barrel for the first time, going all the way back to October. I think that's got investors a little skittish.
And just looking over at the major indexes heading into the final minute here before the close, the S&P 500 and the NASDAQ 100 both down about 1%. So if the S&P holds on to this, it would be its first 1% decline in about a month, Scarlett.
Yeah, even with the hawkish talk, though, from Neil Kashkari, you would think that that would send yields in the other direction, but you have yields declining. So it really just goes to show how the comments out of Netanyahu really sparked a flight to safety when it comes to bonds and, of course, oil moving up.
I think also what's interesting is where you saw that movement in particular. You saw some really interesting moves in the longer end of the yield curve here, and that has been a really risky place for some place that is supposed to have been safe over the last year and a half or so. So into jobs day, let's see if some of these moves continue.
Yeah, you have to wonder, too, what is now the pain trade into jobs? Speaking of, that is the closing bell on this Thursday. When you open up tomorrow, we will have those job numbers in hand. We're looking at a negative down day. It was really a sell-off into the close, with the S&P down by about 1.2% as we settle out here. The NASDAQ up at 1.4%, and volume quite heavy, Tim, throughout the day.
Yeah, taking a deeper look into the S&P 500 right now, 75 stocks only in the green today, 428 stocks in the red, Scarlett.
Yeah, and if you look at the IMAP, it's pretty clear. The pie is almost completely red, at least if you look at the 11 sector groups in the S&P 500. There are a few slivers of green. I'll just highlight where they are. Real estate management up by 0.6%. Autos and components up by 0.5%. But you're slicing it really thin when you get to that point. In terms of the big sector decliners, tech off by 1.7%. Healthcare losing 1.4%, along with communication services.
All right, well, let's take a look at how some of the gainers that I kept an eye on actually moved lower in the day. I think they're all going to stay in the green. They certainly are. Meta Platforms is the one I wanted to start with. It was on track for much of the day to close at a new record, but ended up selling off with the rest of the market. Still, shares closing higher by more than 0.8%. It was as high by as much as 4.6% earlier in the session. This after we saw price target increases from Jefferies and RBC. I do want to take a look at shares of Levi Strauss & Company. Okay, this is something I learned, guys. Did you know that baggy jeans and denim skirts are back?
Yeah.
Oh, Tim.
Tim, where have you been? You live in Park Slope.
So are white sneakers.
Dude,
man.
What is this,
He's
junior
so
high? Like, this is what I wanted to wear in junior high, like the baggy pants my parents would let me buy.
90s are so back.
Chokers.
All right.
Love it.
No?
True.
I guess I gotta get on the TikTok and see what the kids are doing these days. Yeah, so actually, denim skirts and baggy jeans really helped Levi Strauss in the most recent quarter, in addition to cost-cutting measures that the company did implement. Shares finishing the day higher by more than 12.3%. Finally, some deal news, potential deal news, we should say, moving shares of HubSpot higher on the day. Reuters did report earlier in the session that Alphabet is talking with financial advisors about potentially making an offer for HubSpot. It's the marketing software company, and it would be valued at roughly $34 billion. Shares of HubSpot closing today just shy of 5%.
Trying to move over from denim skirts and baggy jeans here, but I'm going to point out Fry's producer Lamb Weston, ticker symbol LW on this. It's down 19% today to the close. This is its worst percentage drop on record. If you do look at this, its quarterly sales did meet Wall Street expectations. It also cut its fiscal year sales and profit forecast. So you're seeing that stock very under pressure today. Another one I have to point out is Hertz Global. HTZ is the ticker symbol on this. So Goldman Sachs ended up cutting its rating on the stock to sell from neutral, but the broker also raised its recommendation on its rival Avis from neutral to sell. So you are seeing that stock under pressure as well, but you do see Avis actually turning higher today based on that. And then lastly, I'm going to take a look at Block. So obviously we know this is a payments company. Morgan Stanley did cut its recommendation on shares to underweight from equal weight. It did say the downgrade did reflect limited additional opportunity for the company's Cash App to expand its banking credit services. Shonali.
Yeah, I want to talk about the bond market now because it was one of those days that the bond market was really wagging the tail here. And you had the bigger moves actually not even on the shorter end of the yield curve. The 2-year yield down by about 3 basis points to 464, but you saw about 4 basis point moves or more on the longer ends of the curve. 430 on the 10-year now, 20-year 457, 30-year at 446. So a bit of a haven trade at a place of the market that's been seen as a little riskier these days.
So moving ahead, you got to wonder what's going to drive the market more. Is it going to be Fed speak or is it going to be comments out of the Middle East with regard to what could move oil prices?
Yeah, I think that's a really good question. I think tomorrow the focus is on jobs and, what kind of surprise we get would actually spook markets. I think it would have to be a really big surprise, either the upside or the downside, Alex.
Yes.
I don't see, given that we got some hotter than expected numbers over the last couple of months, and it didn't really move things in terms of the way that investors were thinking about rate cuts. But what I do think is interesting is sort of the change in tune that we got from Kashkari earlier today.
Yeah, I was definitely focused on Kashkari. However, Halima Croft over to RBC had a note out that was quite worrisome this morning. She was saying that there's a risk that Iran's going to have a more serious response and then target Israeli leaders more directly, and that could be a material risk and really move up the ladder in terms of geopolitical problems, and that's going to be huge. But it's hard to price that in. Maybe you can do that a little bit with oil, but it's hard to price in those exogenous events. So then you have to go wind up looking for just the jobs number and Kashkari and looking for maybe no cuts and go that way.
Of course, also keeping a close eye on the bond market. To Shonali's point, at a certain point earlier this week, you saw the 10-year Treasury yield move about 20 basis higher from where it had ended last week. Obviously, it's come off from that. It's around 430 at this point. But even just looking at today's sell-off, Alex and I were actually chatting about this yesterday. It's been about 281 trading sessions since the last time the S&P 500 actually saw a 2% decline. So that was a little over a year ago. So even with today's sell-off, and it's down more than 1%, that's its biggest loss in about a month there.
Well, we spent quite a bit of time this week talking about the new minimum wage law in California, which saw an increase of 25% for a minimum wage from $16 to $20 an hour. And as a result, we've seen some companies raise prices. We've seen a lot of companies try to figure out, okay, how can we make things more efficient? You have one fast casual chain based in Guatemala, but has restaurants here in New York, a fried chicken chain. It's called Pollo Campero. I don't know if you guys have ever been there, but what they're doing is they're redesigning their stores to make it more efficient for the people who work there. So they're actually, instead of walking 18,000 steps in a single day, which is more than 3 miles. I'm shocked that people who work in fast food are walking that much. That's just so much to walk, down to 9,000 steps a day. And it's saving time. And of course, it's saving on labor.
Wow, this is an amazing story here, and just seeing in general what it could mean for those particular label costs here. But actually, Tim and I were speaking with an executive from Verizon earlier, just talking about how they're implementing when it comes to AI in their technology and what it could mean when it comes to labor productivity, but then also customer service and what that could basically mean as far as making things more efficient. But then also he was actually telling Tim and I that most of their customers, some of their top questions are they don't necessarily want it to dramatically to everything move to AI because they still want to talk to customer service representatives.
Absolutely. Have you been to places where you can order through kiosks? Most of them don't work half the time, and then you have to get in line anyway to talk to the person, except that person is overworked, no matter if they're taking 19,000 steps or 9,000 steps.
Yes, 100% preach. Totally agree with you. But I think it also points to the fact that revamping kitchen restaurants is really hard. This is why it was so hard for McDonald's to do any kind of all-day breakfast thing, because it's not as simple as like flip the burger here, do the eggs over here.
It didn't take years for them to roll it out across the entire company?
Yeah, no, it took a really long time because it's super complicated. So I thought that kind of choreography was quite different. But I also wonder if they can't increase costs and if prices keep rising and the productivity gains kind of wear out, like then do they have to lay people off? Like what's the next trigger that they can pull?
Certainly dealing with macro challenges as well as consumer preferences changing. Speaking of consumer preferences, hard pivot. Did you know, guys, that Kiss is selling its music catalog here to a firm that is trying to use that brand and make it last through the generations? I wanted to talk about this story because, Tim, just like those jeans that you were talking about, you might not know that my 9-year-old niece actually has Kiss as her favorite artist.
Really?
So that is another one.
Not Tay-Tay?
Is that like annoying?
9 years old.
A 9-year-old?
God.
You know, you have to go to Brooklyn and see if the rest of the school thinks so. But like at the same time,
lives in Brooklyn.
You can see how you can keep making money off a brand like this and why, frankly, this is a really hot new private equity play, frankly.
Yeah, I mean, it's just the latest in a line of singers and songwriters selling various portions of their catalog for many hundreds of millions of dollars.
I would argue that Kiss's name, image, and likeness is more valuable than its song catalog. Can you name a Kiss song?
No, I actually
but I know exactly what Gene Simmons and everyone look like, right? Yeah. All right, guys, that is going to do it for our cross-platform coverage of today's market close. But don't go anywhere because Bloomberg TV continues its coverage, as do we here on Bloomberg Radio and Bloomberg Originals. Meantime, catch us same time, same place tomorrow. Happy Almost Friday, everyone.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. That's Jess Menton. I'm Tim Stenivek. Jess in for Carol Masser this afternoon. So some good news and bad news when it comes to retirement. More employers than ever offer retirement benefits, and automatic enrollment has increased worker participation and improved how investments are made. So today's Americans actually have more money saved than previous generations. That's the good news. The bad news is we're not really thinking about the right goals when it comes to saving for retirement. Our next guest says that the goal of retirement plans should be providing income to those no longer working, not accumulating wealth for those who still are. Allison Schrager is a senior fellow at the Manhattan Institute, as well as a columnist for Bloomberg Opinion. She joins us from New York City. Her column today, among the most read stories on the Bloomberg terminal. So, Allison, I want a little help making this distinction here, because isn't the whole idea of building wealth ahead of retirement so that when you do get to retirement, you can then reliably sell assets each year to live off of?
Yeah, well, I mean, they're definitely related. The more wealth you have in retirement, obviously, the more income you have in retirement. But really, when you think about your asset strategy, investing for, okay, I have a big pile of money 20 years from now versus I will have regular, consistent payments for, I don't know, my entire lifetime, the rest of my lifetime 20 years from now, are actually two very different objectives that do require slightly different sort of asset allocation strategies. I mean, this is actually, I think I mentioned defined benefit plans when they were around years ago, at least the good ones, did manage wealth for income rather than just like a pile of money in one day.
Talk to us about the retirement plans in general when it comes into the U.S. So many people that obviously went through the pandemic and were hit really hard there and potentially lost their job, maybe struggling to still get one. Walk us through sort of what is out there and some of the issues people still have trying to get access to retirement plans.
Well, the access is pretty good, particularly if you do have a full-time salary job. You know, for a long time, for smaller firms, it was rare to have a defined contribution plan like a 401k because it was just very expensive. I think I do mention in the story, a lot of the issues we have with retirement are various administrative things that make things very expensive or very rigid. So various Secure Acts, we're now on our second one, did a lot to make that a lot easier. So more people than ever do have access access to retirement plans, and even some states offer them to various people. So at this point, like most people who have like a reasonably high middle income do have access to retirement plans. It's mainly lower income people or people in part-time jobs who don't have them.
Yeah, we're going to be speaking with a company that's creating a platform for gig economy workers. And there was some interesting story this week about gig workers in Pennsylvania actually getting access to retirement benefits. So we're going to talk about that a little later. Hey, Allison, there's this third rail in politics when it comes to Social Security and when it comes to retirement that really no politician is going to want to touch. And that's the idea of, now that we're living longer as Americans, potentially retiring later. How does that factor into the calculation here?
Well, I mean, if you still are going to retire at the same age, but you live longer, you're just going to have more years of retirement to finance. And that just makes the problem a lot harder. So it's unfortunate. I mean, people who are against raising the retirement age, and that seems to be most people lately, do point out that some people do work physically demanding jobs and they don't have the option of working longer. And that is totally true. But it seems to me that we can't say, well, because some people can't work longer, everyone gets to retire early or should be encouraged to retire early. It seems that, we do have programs or could expand the existing programs to cover people who physically can't work beyond 62 or 65 and still have more carrots and sticks to encourage everyone else to work later. I think the bigger issue, when I think about working into your 60s and 70s, is that we think about it as this binary. Like, you're working, then one day you're full-time, and then one day you're retired. As opposed to, I think it's a lot healthier, and we're starting to see more trends of people trying to do this. So it'd be great if we had more support for this, of people working maybe part-time, maybe scaling back their jobs a bit, maybe only doing tasks that sort of still suit them, and sort of do a more gradual withdrawal from the labor force rather than just this binary, I'm working, now I'm not.
Something that I've always thought was interesting is just the financial literacy issues when it comes to retirement planning and kind of the lack of schooling, whether it's in high school or even colleges, for people to kind of have access. I mean, as you know, Tim, you use money for the rest of your life and you have to use these types of financial decisions. So I'm kind of wondering, through your reporting, what you've sort of learned and maybe some of the holes, because each state has different laws for how they go about doing this with their curriculum, but kind of wondering, how do we give people kind of more access to the information that they need? Because some people might have access to a retirement plan through their employer, but a lot of times they still have a lot of questions and don't really understand the types of allocations they really need to be using at a particular juncture in their life.
Yeah, I mean, I found in various jobs, and so I'm an expert in this. I've done this my whole life. I did my PhD in this. So I still find it very confusing when you are signed up for a retirement plan. I'm not sure if sort of financial literacy programs in high school, are going to be able to explain this well, considering even, most 401k administrators make the problem a lot more confusing than it does. But I think people do need to understand the basics, like compound interest. Obviously, that's helpful. But also thinking about different reasons you're saving and the trade-offs there. I think, an issue we do have with retirement accounts is a lot of people sort of don't really think through the fact that they're illiquid, and then, they don't have other forms of saving. There is evidence that retirement displaces more liquid forms of saving. Some people don't have a lot of saving otherwise, so they end up in a sort of bad financial situation, end up drawing down, maybe paying penalties, not realizing they have a tax liability. So I think we do need to sort of really just maybe educate people, make advice certainly more accessible, and find ways to make it more affordable for more people, so they can understand, really a more holistic saving strategy that is just not just about retirement, but all areas of life.
Hey, Allison, I have so many questions for you because you are a retirement economist. You did your PhD in this. And, even I find myself Googling, like, at my age, how much should I have saved for retirement? And there are different answers everywhere. I think a lot of it has to do with, we're trying to make assumptions here. And there are a lot of things that are out of our control. And we don't know how long we're all going to live. So there's a lot of unknowns out there. But what about something like target date funds? That was supposed to simplify everything. How would you design the system differently?
Well, I mean, I think retirement date funds were an improvement on what we had before, but I think they are fundamentally flawed in that they are very wealth oriented. The idea is, build up, be in a lot of stocks when you're young, which does make sense, particularly when most of your assets are still your future earnings and not your wealth. And then as you get older, you move more into bonds. So the idea is that your portfolio doesn't move around quite as much. But that's thinking about wealth, not income. So I think it would be better if we put these terms and judge different funds based on income goals and saying, okay, this is how much income this could get you, and where are you relative to that goal now? I mean, that's the way defined benefit plans used to operate, and there's no reason why we couldn't do that on an individual basis too. But it really takes a rethink of benchmarks and how we assess goals and how people pick funds.
We only have about 30 seconds left, but you talk about how America needs to start thinking more creatively about work. How do we get there?
Well, I think it starts with education. I think we set people up to fail by sort of not educating well about income. We just sort of like, here's this pile of money, figure out how to make it work. Or, you're going to work and then one day you're not going to work. And instead we should be thinking a more integrated approach and to think about sort of different ways you can assess your work. Andrew Scott has a great book on this that just came out of how to sort of change how you see work throughout your lifetime, really, even if you live to 100.
Allison, we're going to have to leave it there. Love it when you join us. Thank you so much. As I mentioned, Allison Schrager, a Bloomberg opinion columnist, also senior fellow at the Manhattan Institute. She's a retirement economist. Her column today, among the most read on the Bloomberg terminal. You're listening and watching Bloomberg Business Week, and this is Bloomberg.
Join Brian Curtis and Doug Krisner at 8 p.m. Wall Street time for Bloomberg Daybreak Asia. Tonight's guests include Meredith Whitney, founder at Meredith Whitney Advisor Group. That's Daybreak Asia tonight at 8 on Bloomberg Radio.
Now your 3-day weather forecast on Bloomberg 1130.
Some lingering clouds around for tonight with maybe a shower in spots. Low temperature 35 to 40 midtown, a bit colder in the suburbs. Coming up on Friday, clouds and sun, perhaps a brief passing shower, breezy and 50. At night, we're back around 40. Then partly sunny in the low to mid 50s on Saturday. Sunday looks like a nice day. Sunshine, scattered clouds, and close to 60. This is Gary Best with your weekend weather forecast on Bloomberg 1130.
Tomorrow, we zero in on March jobs.
Headline unemployment rate of 3.9%.
With fully employed America.
Will the numbers affect how the Fed views the labor market?
What's the why for 200,000 per month?
Continued resilience in the job market.
The March jobs report on Bloomberg Surveillance.
Job growth blew past expectations.
Markets on the move here.
Tomorrow morning at 8:30. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. And always on Bloomberg 1130. Context changes everything.
Access a vast selection of global fixed income securities at Interactive Brokers Bond Marketplace. Search their deep availability of over 1 million bonds globally. IBKR has no markups or built-in spreads and low, fully transparent commissions on bonds. IBKR displays the highest bids and lowest offers received from the electronic venues they access. In addition, clients can interact with each other by placing bids and offers online to execute their trades. Learn more at ibkr.com/bonds.
I'm getting vaccinated with Prevnar 20, a Pfizer vaccine.
So am I, because I'm at risk for pneumococcal pneumonia.
If you're 19 or older with chronic conditions like asthma, diabetes, COPD, or heart disease, or are 65 or older, you are at increased risk for pneumococcal pneumonia. Ask your doctor or pharmacist about Prevnar 20, pneumococcal 20-valent conjugate vaccine. It can help protect you against pneumococcal pneumonia in just one dose. Even if you've already been vaccinated with other pneumonia vaccines, Prevnar 20 may help provide added protection. Prevnar 20 is approved for adults to help prevent infections from 20 strains of the bacteria that cause pneumococcal pneumonia. Continued approval may depend on a supportive study. Don't get Prevnar 20 if you've had a severe allergic reaction to the vaccine or its ingredients. Adults with weakened immune systems may have a lower response to the vaccine. Side effects include pain and swelling at the injection site, fatigue, headache, muscle, and joint pain. For full prescribing information, please call 1-855-213-2138 or visit Prevnar20.com.
America is strong, and today's investments in essential American infrastructure make it even stronger. Build America Mutual only insures U.S. municipal bonds, providing an added layer of security to improve any portfolio with guaranteed income that helps investors reach their goals. Be part of building America. Build a better portfolio. Invest in BAM insured bonds.
Coming up next, we got a great group joining us. We got the CEO of JobSnap joining us, as well as Oscar-nominated actor and entrepreneur Chaz Palminteri. You're not going to want to miss it.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story and an executive change at GameStop. Chief Operating Officer Nir Patel is going to be leaving the company. That word in an SEC filing. Those headlines clearing right now on the Bloomberg Professional Service after hours. We got GameStop down by about 0.7%. The Dow, the S&P, NASDAQ 100 index, Russell 2000 as well, all lower today. Stocks fell ahead of tomorrow morning's jobs report as a rally in oil amid geopolitical tensions triggered a flight to the safest corners of the market. S&P down 64. That was a drop of 1.2%. Stocks did finish off session lows. The Dow was down 530 points, down 1.4%. NASDAQ was down today by 228 points, a drop of 1.4%. 10-year 4.30% with a 2-year 4.64%. Spot gold down 0.4%, $22.90 the ounce, and West Texas Intermediate crude oil up 1.5%, $86.72 for a barrel of WTI. HubSpot shares up 5% today after Reuters reported that the Google parent Alphabet has been talking to its advisors about the possibility of making an offer for the customer relationship management software company. Again, HubSpot today up by 5%. Recapping a sell-off ahead of the jobs report, S&P today down 64, a drop of 1.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, an all-time high of 64 people, more than 1/3 of America's workers, turned to freelance work in 2023. That's according to a survey by the online recruitment company Upwork. Carol, nearly half of those workers provided knowledge services, including computer programming, marketing, consulting.
A lot of stuff,
about a
right?
quarter. What's that?
A lot of stuff.
It's a lot of stuff. Yeah, about a quarter were social media influencers.
Surprise. That's a lot.
How many influencers do we need?
I don't know.
This is according to data released back in December from the online recruitment company. This is interesting. Younger workers are more likely to freelance, more than half of the Gen Z workforce, and 44% of millennials working those jobs in 2023.
All right, so there's a lot of opportunity out there to connect gig workers to jobs. Enter JobSnap. It's a new app that calls itself, quote, Tinder meets Snapchat for jobs. We've got with us the CEO of JobSnap, James Albus. He is also an entrepreneur. With us is also entrepreneur and Oscar-nominated actor and entrepreneur Chaz Palminteri. You know him from A Bronx Tale, Bullets Over Broadway, The Usual Suspects, Modern Family, a lot. We have Chaz. He is on the phone in New York City, and James is right here in our Interactive Broker studio. First of all, we're going to get to you, James, in a second. But Chaz, I have to say, when we were prepping for this on our planning call this morning, we're like, why is Chaz involved in this? Why are you?
I'll tell you why I'm involved in it. Because when I'm an entrepreneur, but when I hear a great idea, this idea, I said, well, wait a minute, I've never heard that before. That is a great idea. You know, especially with me, with my movies, and especially with my obviously first movie, A Bronx Tale, where I talk about the working man. This is like the working man's app or the working woman's app. This is an app where you don't have to go to Google and get information about something you need done. Angie's List, Craigslist. Those companies take a chunk where you have to pay sometimes 25, 30%. This app that James and Chris invented, this goes from the person, the consumer, right to the worker. No in between. And I think whether let's say you have a tree down on your property. Now, if you're in the app, you'll get people right in that area, in your area, where you take a picture of the tree, it goes right to them, they look at it, and you could decide which company you want to use immediately. Boom, they come over. No charge. All you do is pay an app charge, a yearly app charge. That's it. So for me, when I heard this, I said, wow, I don't have to go on Craigslist or Google or call a handyman. This is perfect. James could explain it to you really perfectly.
James, come on in here, because I was surprised to see, I read that this app, and as I was preparing for this, 5 years in the making to figure out how to do this.
Yeah.
Why did something like this take so long?
Well, again, when you iterate and you look at all the nuances that many of these apps, and Chaz alluded to them, a lot of them are relegated into commission-based apps or, pay per click, pay for lead. The frustration that I've seen from at least on the worker side is that these guys were getting overpaid, jammed up about all these fees. So we just took it from a different lens. We just decided to move in the direction of software as a service, just charging a one-time monthly fee.
Who are you charging the fee to?
To the service provider. And
okay.
It's free for
so
those...
the tree removal company in Chaz's example.
Yeah, exactly. So for those people looking for jobs or tasks, there's no cost to that. Unlike other, the competition is always trying to look for ways to, peg on a lot of fees. But again, the other important point that I want to make is that whilst we're talking about the broader service category in terms of tree work, this application has broad appeal. Whether you're looking to, you have a knack for playing a guitar. So the idea there is you can use your skills, your motivation, your equipment, your time to whatever your side hustle is. To make extra money. And it's not just about, there are a lot of people out of work. I mean, I just read this morning that in California there's a lot of people now that are just moving away. I mean, because a lot of these companies can't afford to keep them. So where do all these people go? So a lot of people have innate talent, and that's something that Chaz and I have talked about a lot, and I don't want to overstep that conversation about, using the talents and the skills you have, because we all have them, regardless of what they are. And this, as I said, this has much broader appeal to millions and millions of people across America.
It almost sounds like what blockchain was like, kind of this whole idea of cutting out the middle people and just connecting. You want to do this?
Yeah.
Go right to it. And that's what it kind of feels like.
Yeah.
To some extent, but in an app form.
Well, in an app form, and again, what the app does, it allows you to really build your portfolio. So you showcase yourself as a picture, your equipment, your skills, your time, and all that stuff. And then you showcase that to the world. And again, we don't get in the middle. We don't hold information. We don't curate information. We don't disseminate it. Let the market dictate it freely.
So, Chaz, are you an investor in this?
Yes, I am. Yes, I am.
So
I believe in it. A great idea, I always said, is a great idea. And when I met James, and I know James and Chris, and it was just something. And I said, hey, well, I could help, obviously, as an investor, I could help get the word out there. As I'm doing right now. I mean, in my Instagram, I reach 1 million people a month. So for me, I was like, people got to see this. People got to know this. This is a no-brainer. So as an investor, I said, look, I can control the media. I can control getting it out there. It's not like it was years ago where you had to pay a fortune for radio time. You had to get on the Tonight Show and talk about all your things. It's different now. We control control the media.
That kind of hurt us, that radio time comment, but we're going to still continue with the conversation.
We can turn you off at any point, Chaz. Okay, we're in control here. Okay, just kidding.
No, we end up we still need you.
Okay, all right.
You can
stick
stay
around.
Yeah, you can stay.
All right, I dug a hole. I'm trying to get out of it. But seriously, but you can control a lot of the media yourself. If you're someone in the public eye like me who reaches 1 million people a month. So I just thought between that and between this is a great idea, why not? Let's do it.
It just debuted, right?
Yeah. We're in the Apple Store and the Google Play Store. So
what can you tell us? I know early adoption or what early activity.
We have a couple hundred users on both sides, mainly in the northern suburbs. The Connecticut area where I live. I live in Ridgefield, Connecticut.
Yeah.
So the idea here is to geo market here in the tri-state area and then fan out across the country. But the application has national appeal.
You know what was interesting, James, is that when I was doing the research for this and Googling, when I Googled the name of your company, JobSnap, there were 4 paid advertisements for competitors above you. And it made me realize, dang, this is a lucrative space because people are paying a lot for that placement to be above you in search.
Yeah. So again, just in terms of the cost to in terms of the search, right? Because those competitors, which we all know of, and we alluded to them, and I'll make mention of them, Angie's and Home Advisor and Thumbtack. They're pay for click, pay for leads, and so we organically just want to let the market dictate where it wants to go.
What would happen if those companies see that your model's working and they say, wait a second, we're going to change our model. We're not going to do lead generation anymore. What we're going to do is $90 a month fee, just like these guys.
They'd implode their business and you'd short their stock.
It would be that much of a difference?
Oh, absolutely. Huh. So to give you an idea, I through my competitive analysis, that those companies they're charging $4,000 or $5,000 a month to these guys. So if they move to a $97 a month flat fee, their revenues would crater, and you'd short their stock and make a lot of money on the downside.
So, Chaz, we only have about 45 seconds left, a minute left here. We'd be crazy not to ask you about kind of all of the acting you've done and playwright. You've done so much stuff. Is there just, I don't know, what do you think about the world and content creation today? And forgive me, just only about 40 seconds left.
Okay, well, I'm against, AI. I think that's, you cannot take my image, you cannot take my work and put some words in my mouth and put my image up there. I'm totally against that. I'm in favor of a lot of things, but that's one thing. I like artists to be artists, but when it comes to AI, I don't agree with that at all. I think if you don't like something, just shut it off. I love free expression. I am an artist. If I write something that you don't like or do a movie that you don't like, you have the option to shut it off. But I also have the option to make it, and that's the way I feel.
Gosh, you covered a lot, and certainly topical stuff that we talk about an awful lot here at Bloomberg. Gentlemen, thank you so much. Curious to see, check back with us after it's been up and running for a little while and let us know how it's going. CEO of JobSnap, James Albus, and of course, Chaz Palminteri. He's joining us on the phone here in New York City. All right, let's get a check on world and national news. For that, we go off to D.C. and Amy Morris. Hey, Amy.
President Biden, as you know, spoke by phone today to Israeli Prime Minister Benjamin Netanyahu. The phone call lasted about a half hour. Secretary of State Antony Blinken talked about it while he was still at NATO headquarters.
He underscored as well that an immediate ceasefire is essential to stabilize and improve the humanitarian situation and protect innocent civilians, and he urged Prime Minister Netanyahu to empower his negotiators to conclude a deal without delay to bring the hostages home.
Secretary of State Antony Blinken there. President Biden told Netanyahu that future U.S. support for the Gaza war depends on new steps to protect civilians and aid workers. Israel is bracing for a retaliatory Iranian attack following its raid on the Iranian embassy in Iraq. Navigational signals were scrambled over Tel Aviv to disrupt GPS-navigated drones or missiles that Iran or its proxies might fire. Israel's economy minister Nir Barkat tells Bloomberg that Israelis remain traumatized by the Hamas invasion.
There's consensus in Israel. The war will not be over until we eradicate all of Hamas. Sitting in Rafah, 1/4 of Hamas, we will fight evil until they surrender. There's no other choice, and time is not on our side.
Barkat said it is not only Iran that is financing jihadis. He says Qatar is backing them too. NATO Secretary General Jens Stoltenberg's plan to create a $100 billion fund to support Ukraine is getting some pushback from NATO allies. They're reining in expectations about exactly how to support the fund, keeping it viable for 5 years. No Labels is going to sit out this year's presidential race. The Wall Street Journal reports the group, which aimed to field a third-party presidential bid, is abandoning efforts to create a unity ticket this election season. The decision comes after the death of its founding chair, former Connecticut Senator Joe Lieberman. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
Get the news you need to start your day in just 15 minutes.
Now to the latest on the war in the Middle East.
Optimism that the Fed will be able to engineer a soft landing.
Wake up with Bloomberg Daybreak, U.S. edition.
The Supreme Court is set to hear oral arguments tomorrow.
A lot of upsets in college basketball.
Available now on your podcast feed. Each weekday morning at 6 a.m. Eastern.
The latest in the presidential race.
Subscribe to Bloomberg Daybreak, U.S. edition today on Apple, Spotify, and everywhere you get your podcasts. Bloomberg Radio. Context changes everything.
This is the Bloomberg Black Business Beat. Earn Your Leisure is a rising media platform whose main focus is to help get financial tools and information to the Black community. Led by co-founders Rashad Balau and Troy Millings, the company is working on special partnerships with schools and other brands to help young people learn more about investing and business. On top of teaching the basics, Earn Your Leisure is pushing for more people of color to start their own businesses, something Millings says is vital to building wealth.
What better way to create more incomes than create a business? If we look at the wealthiest people in the world, they've all created businesses and they've had ownership inside of it. And so, we've seen mom and pop shops inside of our communities, and now it's time to figure out how do we scale, how we create businesses that scale, and how do we create more wealth for not only our families from a generational standpoint, but our communities as a whole.
While the number of Black-owned businesses has grown over the last few years, they still make up a relatively small share of overall businesses in the country. I'm Bloomberg's Justin Milliner on the Black Business Beat.
Doors take us to summers away or winter adventures and afternoon getaways. Your dedicated Fidelity advisor can help you open those doors by working with you on a comprehensive plan to help you reach your wealth's full potential. Because doors were meant to be opened. Visit fidelity.com/wealth. Investment minimum supply. Fidelity Brokerage Services, LLC, member NYSE SIPC.
I'm Tiffany, founder of Harlem Pilates. When I couldn't find Pilates in my neighborhood, I started a studio from my studio apartment. Chase Inc. helped me grow from 1 Pilates studio to 3. Because when you start small, you're going to need some big help.
With the Chase Inc. Business Cash Card, you can earn up to 5% cash back on business essentials, so your business can go from here to possible. Chase for Business. Make more of what's yours. Real business owner compensated for their participation. Cards issued by J.P. Morgan Chase Bank, N.A. member FDIC. Subject to credit approval. Terms apply.
River Spring Living offers housing, healthcare, and rehab that's been trusted by New Yorkers for over 100 years, including the renowned Dr. Ruth.
I'm Dr. Ruth Westheimer. I spent 6 weeks at River Spring Living. They took such excellent care of me, and they gave me a beautiful community while I was getting better.
Call 855-45-RIVER or visit riverspring.org/Ruth to see why we're trusted to provide care for over 18,000 New Yorkers.